CPI down? TLT up 3.8% in a day. Are we going to have a Santa Claus rally for stocks and bonds? What a crazy week we had in the market. Is this a joke? Are we in the metaverse already? Is this real? Stocks and bonds just melt up unexpectedly. Huge percentage as CPI comes in weaker than expected. We haven't seen a market so FOMO like this in a while. On Wednesday, we actually seen Bitcoin drop to 15K. The next thing you know, on Thursday morning, 8:30, in the blink of an eye, everything changed. We went from 8.2% CPI to 7.7% CPI. Just 50 basis point change. It moves the S&P 500 up 5.5% and TLT up 3.8%. Amazing! So does this mean the trend has changed in the bond market? Has inflation really peaked? Will interest rate not only stop going up, but coming back down now? Will the Fed stop raising the rate all of a sudden? Just for 50 basis point drop? I am glad we can finally see inflation coming down slowly. But are we really out of the woods yet? Could this be an ultimate bull trap? Let me explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want it to be real. You want it to be true. You need to be my client, don't you? U.S. Treasury yields tumbled across the board on Thursday after the October Consumer Price Index report. A key inflation measure came in 7.7% down from 8.2%. On a monthly basis, it climbed 0.4% in October, below estimates for a rise of 0.6%. Meanwhile, core monthly inflation, which excludes food and energy, increased 0.3%, below estimates for a raise of 0.5%, weaker than expected, signaling that price increases have possibly peaked. Since last month's, from October 13th, every time after the CPI report, the stock market rallies. This time, even the bond market jumped higher. The benchmark 10-year Treasury yield last plunged 29 basis points to 3.848%, falling below the psychological 4% level. The yield on the 2-year Treasury note fell 29 basis points to 4.33%. Yields and prices have an inverted relationship. 1 basis point equals 0.01%. The latest CPI report gave investors hope that inflation is now past its peak, lending confidence that the Federal Reserve's interest rate hikes are slowly working to tame high price increases. Stocks rallied on the news. This confirms the Fed's own view they need more measured rate hikes now. But this doesn't stop them. It just affirms their plan. The Fed's perspective, the dip in inflation is welcome news, but still not enough to stop further tightening. In November, the Fed raised rates by another 75 basis points, its fourth consecutive three-quarter point increase, putting rates at their highest level since 2008. Markets also continued to watch developments around U.S. midterm elections, as it was still unclear which party will control the U.S. Senate of House of Representatives. The outcome is likely to affect decisions around monetary policy and spending. Here is why I don't want to get into crypto. From a $32 billion valuation to a fire sale in 11 months. How FTX nosedived in spectacular fashion. The implosion of FTX has led to a sharp reversal in Sam Bankman-Fried's $15 billion crypto fortune. Here's how FTX went from a $32 billion company that was buying Super Bowl ads to worthless in less than a year. We don't know what FTX did with client funds. FTX is not a bank. It should not be subject to a liquidity crisis. Assets shouldn't even be backed 1.1. Assets should just be there. Once more, it's the retail investors who pay the biggest price. As Warren Buffett once famously said, only when the tide goes out do you discover who's been swimming naked. Buffett also said it wouldn't end well. As Michael Burry just tweeted, the problem with crypto, as in most things, is the leverage. If you don't know how much leverage is in crypto, you don't know anything about crypto, no matter how much else you think you know. Celsius erased tens of billions of dollars and highlighted to investors just how much leverage is being used by many in the industry to juice returns. Ultimately, that leverage helped contribute to failures and bankruptcies at different crypto firms, including Three Arrows, Capital, Voyager Digital, BlockFi, and Celsius, among others. Just like Buffett said, it would not end well. Warren Buffett's first rule of investing is don't lose money. Of course, most traders and investors have lost money before, including me. I can't imagine financial education Jeremy losing $300K in a crypto broker stock. Sam lost $15 billion just in a year. The money is gone forever. Just like the Fed doing QT. The more valuable thing is the lesson that you learned from your mistake. And never make the same mistake twice. Like Michael Burry said, the risk in crypto is leverage. Leverage is highly risky. There are a lot of leverage ETF. Those are more dangerous than they look. Let's look at TLT. On Thursday, it was up 3.5%. From December of last year, it was down 40% to the bottom. If you trade the 3x leverage on TLT, which is TMF, you would have lost 80% of your capital. Even Catherine Wood, who loves risk on asset, wouldn't buy T-ARC, which is a 2x leverage of ARC. First of all, those leverage ETF has high fees. If you hold it for a long time, especially if your position is down, you will lose money so fast. It's better to just give it to a stripper, because those fees will keep coming every week. It's ridiculous. Never get involved with leverage. From Thursday's melt up, one lesson is always be prepared for the downside risks as well as the upside risk. Another lesson is from Peter Lynch. He said, don't try to predict interest rate, because if you can do that, you probably can predict oil price and CPI number 2. Then you are already a golden billionaire. As for the market, it could still be a bull trap. I think we are potentially going up to retest the 200-day moving average and fill the gap between 4,037 to 4,083, because TLT only just popped for one day. It doesn't make a trend. It's still in a long-term downtrend. The Fed will still raise 50 basis points in December. That will make the Fed fund rate cross over with the 2-year yield, which could finally set up a deflationary crash coming. Okay, now I'm going to show you my client Lee Vincent's book, The 3 Most Important Influencers You Need to Meet. And my client Taddy Eazzy's Wicked Pussy Perfume. It's an erotic novel, such an amazing book. Place your order today. And my book, Believe You Are Worthy. And my book, Time. You are such a good boy for watching my video right till the end. I have finally reached 267 subscribers. I just wanted to shout out a big thank you to everyone that has subscribed and that is supporting me on my channel here. Bye.